Have European stocks hit peak pessimism? It's not too pessimistic to say Europe is in an existential crisis. ECB chief Christine Lagarde said that on Wednesday in Davos as concerns grow that Donald Trump's America First policies could mean European firms are the loser. Well, Zoe Gillespie is an investment manager at RBC Brewin Dolphin. Zoe, there seems to be a lot of negativity around. Is it justified?
I think, as you say, there's been a lot of negativity at the start because of the tariffs and really the unknown factor about how that's going to sort of play out. However, European equities have made a good start to the year. In particular, we've seen a lot of the luxury brands do well. And we've seen certainly with Richemont coming out with good numbers, LVMH out next week. And a lot of it has to be seen maybe as people purchasing in that sector ahead of potential tariffs coming in. I think the danger is obviously that Europe export 20% of cars to the US. And certainly it's one of their big markets. So there's certain sectors, if it's electronics, manufacturing, that could be impacted. So I think there's unknown quantities, but so far we've seen certain sectors do well. I think if you look at banks versus Europe versus US, it could be a tricky time relative to the fact we see deregulation in the States. But on balance, I think certainly it depends sectors, and I think certainly that the impact of tariffs are going to give short-term negativity. And also we've seen the continued strength of the dollar versus the euro, which seemed to me play out as the year goes on, given the fact that we think rates are going to stay higher for longer in America.
Which sectors seem safest then? How can European investors position themselves for the Trump future?
I think if you're investing in European companies, certainly ones that are more global plays and are less focused in domestic markets, I think certainly would be the play. And a lot of companies that are listed in Europe may derive more of their earnings from overseas, and certainly they're going to be less reliant on an economic slowdown in Europe. And I think that's probably the main way to play it.
Let's talk specific results then, Zoe. Primark owner AB Foods cut its sales guidance today after a weak Christmas quarter. What went wrong there?
Yeah, it was an interesting one because they've said that Primark's sales growth was only 2%. So initially they had guided for high single-digit earnings coming through in November. So the forecast has been cut a bit. And I think certainly they saw UK and Irish sales decline by 4%. We had a stronger performance coming through in Europe and America. What they've said, they blamed for certainly unseasonably warm weather in October and November. Had impacted on sales, although Christmas trading seemed to be a bit stronger. So it's whether it's just a seasonal thing or whether it's actually more into the fact that the UK consumer is starting to lose a bit more confidence, and we are maybe going to see a bit of a slowdown in the sector. So I think it'll be interesting to see how that plays out in the next quarter for them.
What do you think, Zoe? Is it really about the weather, or is it a bleak indicator for the rest of UK retail?
I think UK retail's had a decent reporting season, actually. I think certainly we've seen sort of stronger numbers coming through from other retailers. So I don't know whether Primark is as Christmas specific as others, but I think certainly that the UK retail sector seemed to have a strong Christmas. But as you say, I think confidence getting into 2025 has dipped a bit, and I think it might play out the rest of the year. So I think it'll be interesting, but Primark seems to be at the lower end of the price point, which may help it to get customers if there is a slowdown.
Puma also disappointed markets today. Can it just not compete against Adidas and Nike?
Yeah, it was an interesting one because obviously last week we had, as you see, good numbers coming through from Adidas. And I think certainly what they've said is they've lowered profitability guidance. I think a lot of what Puma is facing is that they've had increased costs because of higher interest rates. So I think they're going to have to try and look at making some cost-cutting plans, which they highlighted, to try and get the margins down. So I think it's a tough market. We've seen some newer brands coming in, which younger shoppers seem to be moving towards ahead of against the bigger players. But certainly it wasn't good news today, and the share price was off about 16% the last time I looked on the news.
That was Zoe Gillespie of RBC Brewin Dolphin. Don't forget you can watch more videos on Reuters.com.